Okay, I think we're gonna connect to the stream here. The YouTube Live actually changed quite a bit in terms of the platform. That's why I'm a minute late, but looks like it's mainly the same. There's just some stuff that does look like it's changed a little bit. It's a lot cleaner. I do like that. I think everything's good to go. Just making sure it is public. Default stream setting. Closed captions, no, unlist. Okay, well, I think we're ready to go here. Looks like we do have 2 viewers, which means that it must be live. Awesome. All right, so let's get this global macro as well as this crypto market update started. We are gonna go over gold and silver ratio, as well as a little bit of oil first, just because we have to get a good understanding of the larger assets at play, and then we will talk about crypto like always. Looking at BTC, talking about what we talked about yesterday, looking at that potential level of 1.1 as well as 10.4 for potential level of support, and then talking about if we do hold this, which it looks like it is, what the potential outcome could be. We haven't really seen a whole lot from when we last talked about it, so the real outcome potential and the desired trade setup is exactly the same from the previous video. So let's get the record button. And also I'm going to quickly just get my water. I will be right back, and then we'll start the recording here. There we go. I filled up a full water bottle, but did not bring it into the room. All right, we are good to go. Awesome. So let's open up gold, and then let's discuss some of the commodities, and then we'll go right into crypto. All right, so we want to start off with a large time frame on gold because, in my opinion, gold's at an extremely pivotal zone, and we do see that previous key level. We'll talk about it in the video, but gold's at a pretty key level of support, in short. All right. Hello traders, welcome to a global macro update. We're also going to be combining a crypto market update at the later part of the video after we've completed our analysis on gold, silver, the gold and silver ratio, as well as some WTI crude oil. And then we'll jump into BTC, the tools that we use to analyze the altcoin market, and then we'll actually look at specific altcoins. So let's get right into the video. We're first going to be taking a look at gold at the start of the video. We do see that previous key level of around 1900, which was our previous high back in 2011. We did have a higher high than this back in the late 70s and early 80s when there was that huge rush of inflation with CPI numbers going up and stuff. But this was that last major high, and we broke right through it. We didn't really see any pullback when we were actually going up, breaking the zone. But now we're getting that strong pullback, which in my opinion is looking like it's going to potentially hold the zone, and then we're looking for continuation to the upside. It could be a longer than ideal consolidation, but the situation we're looking for is either a descending zone connecting the series of lower highs into a descending triangle zone, or just an entry close to that area, and then you're looking for stop losses well below the $1,900 zone. We do see the price has breached below the area, but the buyers were able to pick it right back up, and we do see the candle currently sitting at around 1933, well above the major level of support. And I just put ideal retest of the zone right around here because in my opinion, that's going to be a pretty major zone where potential buyers are going to be located, especially since we see so much bullishness in gold. The trend, the momentum obviously is aggressively to the upside. And then with the drop back kind of setting of the uncertain monetary system that we have with the proliferation of currency, I do expect gold, silver, and other safe haven assets that have a fixed supply to be going up as well, because we are in a time where right now we'll talk about actually the US dollar, because this is going to be playing a vital role in our analysis. So we will talk about the US dollar before getting into crypto, but overall it does look like It's holding. We'll get into a smaller time frame to discuss a little bit more. So on the daily time frame, we see a massive candle to the downside, but we do see this current daily candle hold and have a large wick to the downside, pushing right back up, closing green, indicating buyers are present in the around $1,900 level that we talked about on the weekly chart, looking back at 2011. So in terms of the sell-off, looking at the smaller time frames, the 4-hour, the 2-hour, I do want to see at least 2 injections of buy pressure coming into around the $1,900 zone. This is our first injection of buy pressure after this huge sell-off. We noticed the bounce, there was a series of higher highs and higher lows on a small time frame, and we noticed that we broke above the previous high that we were not able to break right here. So it's great to see, but I would be a little bit hesitant. It'd be nice to see a double confirmation, which would also be a double top. And if you really want to be really cautious, that would be the next key zone that we're looking to pass. We can see it was a previous level of support indicated by these wicks and candle closures, as well as previous resistance as well. So overall, that does look like an opportunity. Kind of something like that, you'd get some level of a recovery. That's my expectation. If we start to be range bound and we don't break this zone, there's going to be no entry. We use stop entries, we use retests where you get a break and retest to validate the previous resistance as a new level of support. These are the situations that reduce the risk of getting yourself in sticky situations, and that's, in my opinion, a good thing to have. So we're patient, we're waiting, but I think this is a really great opportunity for a potential dip buy where we're looking for continuation to the upside. We know the $1,900 zone is very strong, very well respected, and has shown and proven to be a solid level of demand so far. We want to see a little bit more validation, but I wouldn't mind just patiently waiting and seeing something appear here. Maybe it would be a symmetrical triangle with the descending and higher lows and lower highs. It could be an ascending zone with this 1945 zone being a key level of resistance. It could even be a descending zone, right? We don't exactly know. I think there still has to be a formation that has to play out here. I don't really see anything even on the 1 hour. So I'd like to see something appear before I make my judgment and kind of create any sort of structure. So I think it's a great opportunity for dip buying, but I want to be certain that I have the highest dependable opportunities to enter, and I don't see that just yet. So that's my analysis on gold. Let's go back to the 4-hour chart and just leave it at that. So now let's look at silver. Silver's in a bit of a peculiar place on the weekly chart. We do see there's a massive rejection at this previous level of support back in 2011 through to 2012. We see that was a strong level of support for this huge triangle formation, which was kind of similar to the gold formation. And we got a massive break out of this consolidation phase. So this was that consolidation that silver was in, right around there. We broke out of that zone and we just hit a major level of significance. So makes sense that we're going to be expecting some level of pullback, consolidation, resistance at this key level. But like again, with gold, silver is going to be, in my opinion, on the same boat of we're only looking for longs, right? It doesn't make sense to be shorting at this point, in my opinion. Talking about, the global macro part of it, gold and silver are, in my opinion, one of the best assets to be looking at if there is monetary uncertainty, if there is currency that is being proliferated, that is being printed at an exponential rate, exactly like we're seeing now. We've seen this happen before. America in the late 40s, 50s, and 60s printed a lot of money and they had very low interest rates, like around 2%, right? The lowest they've ever had. And what that created was the 70s and especially late 70s when inflation was crazy. And I think that's what we're seeing right now. And gold and silver did extremely well during the 70s. So I think we're entering that phase and we can see where gold is. Gold has broken the 2011 highs of 1900. Look at where silver is in relation to gold. We can see that it's not even close to where gold is in terms of the comparison versus historic price action, because this still has, let's say it's at $25 right now, it has still double to go before we're even breaking the 2011 highs. So we got to remember that silver, we can see right here, is is what you call a high beater, so it's going to appreciate at a greater rate when it's in a bull run, similar to altcoins and BTC. But if we're in a consolidation or if we're in a bear market, most of the altcoins as well as silver compared to gold is going to depreciate at a greater rate. It's going to fall at a greater rate compared to the main asset in the market, gold for the metals as well as BTC for the cryptos. So right now, I think we're in a metals market, so we're going to be looking for continuation. I don't think we're going to be able to retest that zone, but I'll be looking at around 24.40, so we'll go into the smaller time frames and discuss, but we really want to play the backdrop of the large time frame because that's going to be very significant to understand what's happening within the price action. So we got a massive impulse move. I don't think the correction is going to come all the way down to here. We're getting the correction right now. We just want to see a support, a base get created, and then we're going to try to jump back into the silver opportunity and then play the long side on that. So that's going to be the weekly chart. This is now the daily chart. I have a nice ascending zone that was able to hold along with this previous level of resistance, which is now acting as a zone of support in confluence with that ascending zone that we talked about before, creating a strong level of demand at around 24.86. And I would like to see a little bit more confirmation, but I think that's a pretty solid high or low on the daily chart, at least in terms of the confluence and confirmations. Let's now go into the 4-hour chart. On the 6-hour, 12-hour, there we go. The 12 hours are a good illustration in my opinion because what we can see is a wick to the upside here and then the price able to hold this key zone of resistance, right? And then we got a strong push to the upside. Probably somewhat similar to the amount of distance right around there. And then we got a big sell-off, but what we're looking for is for key levels of demand, right? And what we're seeing right now is a key level of demand get held. So ideally, we're looking for double confirmation or we're looking for this structure to break towards the upside just so we're not trading within a structure that's going to go to the downside. We want to see structure break, which would mean a series of highs get broken to form a new high, and then we're looking for, if you're looking to short, obviously it'd be vice versa, but you get the gist. So let's now go into a smaller time frame and see what's happening on the silver chart. I'm just going to take some of these off because we don't need all those lines. Cool. All right, so let's take that away as well. We can redraw that when we get into the smaller time frames. And that as well. All right, so do see a higher high and then didn't form a higher high than this wick high right here, but there was a massive injection of buy pressure with this huge bullish engulfing candle. It didn't close as bullish as you'd want to if you were looking for a huge bullish candle closure. But this is still pretty solid with the price closing above the previous candle open, which is a bullish engulfing candle. And then you see the next couple candles here close higher than the open, which is very bullish. And then now we're seeing a small pullback here. Let's go into the 1 hour and see what we're able to find as well. Yeah, we do see a small ascending zone and a descending zone or a horizontal zone. So you can call it an ascending triangle. Now, in an ideal world, we would draw this like here. This would be the next big setup that we'd be looking for. So let's go here. And on gold, it's similar. We don't have that lower high. It's not as... I think we can look at it in a little bit. I'm just going to look for the projection. And there is our symmetrical triangle that we'd be looking for. And then when we go to the 12 hour, we can see that's the zone right there. And then it's forming at the apex right at the key level of around $26 or $27, right? That key level, if we're zooming back, that strong level of support is right in the middle of the breakout zone. So this is looking phenomenal. It's going to take a little bit to actually break out. You know, we could be waiting an entire trading week for this to actually really break out and get to where we want. You could be looking for trades within it, but ideally you'd be looking for something like this. One more validation. If resistance get turned into a new level of support, and then a break to the upside. That's the type of structure that you'd be looking for. So silver does look like it's in a better position than gold. We can see that you could do it with gold. It's a little bit aggressive, but you could do it with gold if you really wanted to, like so. But I do think that silver's, in terms of the price action and technicals, in a better position. And then quick look at the gold and silver ratio. We do see that it is aggressively pushing to the upside. And we see this level get broken, tested for a new level of support. So it broke the market structure. We see that consolidation right there. And then if you were looking for sells, you would wait until the market structure broke there. Broke to the upside. So now we're just waiting for our potential structure. So let's just draw on this and see what we're able to identify here. I still like that zone. It's an expanding area, which isn't ideal for my type of trading. I like contractions. And then that's pretty well unconfirmed, that series of lower lows where we're not really able to get a third low to touch right there. So that's an unconfirmed trend line. Let's just make it dotted. And then once we get another potential touch there, then we'll be able to confirm it. But right now we're in a downtrend and we just broke the market structure. But like I said before, we are still very bullish on the metals really sector, and then we're looking at silver especially to appreciate at a greater rate than gold. So if that is the case, the potential outcome could be, or actually could be something like that, where you get a squeeze here, where you get a key level of resistance and an ascending support, and then you get that big sell-off that's going to come after you break not only the ascending zone, but also the horizontal zone that's going to give you a confirmation. Wouldn't really ever trade the gold and silver ratio, obviously, but it's a really good chart to look at if you're in the metals market, for sure. So overall, I'm definitely still very bearish on gold and silver ratio, which means I'm more bullish on silver than I am on gold. Doesn't mean that I'm bearish on gold at all. Got something in my throat. Excuse me. But it just means that I'm more bullish on silver than I am on gold. All right, quick look at the WTI Crude Oil. Actually, I'm going to take a quick look at the DXY, which is the US dollar currency index, before we actually jump right into it, just because I want to know what it's doing. It's pretty important. So let's go to the daily. So this trend line is from all the way back here. We can see first touch, second touch, third touch, and then I'm not going to use that as an exact zone or an exact price point. So I'm going to see if the price is able to break this 94 range. If it's unable to break this 94 range, we could actually start to melt down yet again, because this is currently range bound. We've got support there, we got resistance there. We're going to see if it either makes a higher high and higher low, so then you're testing the previous resistance as a new level of support, breaking the market structure, or we're going to continue the market structure and you're going to get a lower low and an ideal lower high to look for a potential sell-off opportunity. So that's going to be the two potential plays for the US dollar. I don't exactly know which way it's going to go. The overall momentum is trend is obviously to the downside, but we do have to keep in mind other things like the SPX and risk on assets. If they're looking a little bit more bearish, you might want to be looking a little bit more bullish for the US dollar. But right now, I expect it to just continue sideways, and we'll see where it goes from there. There's another potential unconfirmed zone right there. You got 1, 2, 3. Yeah, I'd say a confirmed zone. Although I would like to see it, because it's further away, it's not a structure here, it's in a structure previous. I would like to see it test and either have a type A or type B candle closure before we really say that that's a confirmed zone, using that as a key confluence area for supply. Okay, so we know what's happening on the DXY. So let's go back. Actually, let's leave it like so, and then let's go back to Western Texas Intermediate Crude Oil. So it's been in a very slow grind, but it's been able to hold above the 39.65 zone, which has been the key area for me personally to see if we're going to get a topping pattern. We were seeing a series of higher highs, higher high, and then lower high, and then potentially that was the situation that we were going to find is a descending zone, and then you're going to see that this 39 area on a large time frame like the weekly was a very significant level, and then we were looking for a potential break and retest and a continuation, because usually gold and silver are negatively correlated, and gold obviously is appreciating at an extremely aggressive rate to the upside. So if we're just looking at correlations historically, this should theoretically be going down, although it's not really right now. And why is that? Well, during uncertain times, people rush into gold because fiat currencies aren't very stable. If there is a leader or a government or some entity that is printing a lot of it or being unethical or unresponsible. And then also oil is used in a lot of production, transportation, goods, and all that stuff. So when the economy is doing better and businesses are expanding and overall economic activity is increasing, that means that people are going to be using more things like oil. Whereas if there is worry, uncertainty, fear in the overall world, people are going to be going towards gold, and then there's going to be less economic activity because there is uncertainty. People aren't going to be investing in their business, other businesses, stock markets, all that stuff. And that's why there's a negative correlation there. So theoretically, should be going down. So we're going to be patient here on the daily. We still got 3 hours and a little bit until this candle closes. We haven't seen a candle closure above 42, let's say, in a very long time, since the huge meltdown that occurred in March of 2020. And this is an extremely significant zone. We can see back in the, let's say, since 2017, it's been a very strong level of support. And we can see it was a key level back in December of 2018 where it bounced very, very aggressively. And we see that we're now coming in for a retest around that area. So this is a very significant zone. I do think that if we start to see topping, and especially if we start to see the price fall below the 39 level, we could see aggressive push to the downside. That could be an opportunity for things involving crude oil. So that's going to be the analysis of the commodities. We're now going to go into BTC. Going to take a quick look to see if we have any comments. Nope. And then we're going to go into BTC. All right. When you see no comments, you can take it in two ways. You can take it as in you're doing a good job because you're explaining it thoroughly, or you can take it as in people are unengaged, but I always take the first option. Let's say that. All right, so let's take a step back here. Let's just take these off. So what did we say yesterday, or Monday, I should say? We talked about this 11.1 being a potential level of support that we were looking at, but ideally we were looking at entries within this zone right around here, between the 11.1 and 10.4, 10.5 range. That is that key level of demand if you're swing trading that I'd like to be potentially entering in, or we'd be looking if there is an ascending zone that holds right here with a series of higher lows. We'd be looking for a break in the 12K zone in order to look for opportunities to long. Those are the two situations that we were looking for in BTC. And the overall momentum, direction, bias, in our opinion, or at least in my opinion, is going to be long, because we do see the volatility is expanding after a long contraction in volatility, like we saw back in March of 2019, as well as October/November of 2018. And we saw that these moves were really aggressive and continued for a long ways. We can see we had two consolidations where we could have got great entries, where this is our first consolidation we're seeing right now. So I think this is the first great opportunity to look for longs before the next impulse push to the upside, taking you to, let's say, the 13K range and above, in my opinion. So we'll see where it goes. Let's jump right into a smaller time frame, looking at the, like, let's say 10 or 11.1K zone, somewhere around there. We were looking at that potential level of support. Does look like it is holding. We see lots of wicks at that low, indicating buy pressure, keeping the price up very quickly, and really not seeing any candle closures below the zone. That's great to see. In an ideal world, we would see something like this, where you see a series of higher lows, higher lows. You could see a little dip there where you get a descending zone like that. But in an ideal world, like I said, this would be a support zone, and then you'd see a resistance zone right here, and then you'd see an aggressive squeeze coming in, pushing the price towards an apex and not just consolidating sideways. You want to see that squeeze like this, and then you want to see the price consolidate, and then boom, once you get that first solid impulse push, you're looking for that retest of the previous high to a new level of support, and you're looking for continuation. Ideally, you could be looking to potentially add in at that previous high because it is so well respected. So that's going to be the two options that I have for BTC. That's going to be option number one, is this descending zone right around there. I think option number two is, if we do get the price to come down here, we could be looking for, like I said, something like that with a horizontal zone, and then you'd be looking for a retest of that zone of confluence. So we don't exactly know what the structure will look like just yet. I think it's a little bit too early to tell, but I think it will come into fruition here, and we'll be able to get a really good entry, maybe around 10.2, 10.3, or even better, 10.8. Or sorry, 11.2, 11.1, 11.3, somewhere around there, or 10.8, 10.7 would be really ideal as well. So we'll see where it comes out to. I think it will consolidate for a little while before we actually get a big move up, because that was a very, very strong push from like 9.1 to basically 12K. It's a 30% push. So we're going to see some level of consolidation before the next one, in my opinion, and we're going to be ready for that. So that's going to be the analysis on BTC. Quick look at the total too. Does look like it's holding here after the consolidation on Bitcoin, which makes sense. I think we will be seeing a decent amount of consolidation within the alts, just because BTC is in a position where it probably will consolidate. Quickly looking at the market cap for Bitcoin, or sorry, the market cap dominance for Bitcoin, we do see that it's consolidating, just really hanging on at this little support at around 62. So we will be looking to see if that zone breaks. If that zone breaks, I think alts will really fly, because Bitcoin dominance has held above that zone for quite some time, since the summer of 2019. And then if we fall below that zone, we can see it was a pretty key level of significance back even in August of 2018. And then quickly talking about the BTC volatility, we do see after the expansion phase, which was this massive move to the upside, we're seeing a contraction now in volatility, which is good to see. And ideally, we're looking for a contraction and then an expansion after a break of a squeeze or some structure that we have in edge trading. Wedges, triangles, channels, stuff like that would be a really good thing to be looking for. So it does line up with our BTC analysis, because we do want it to contract a little bit more. Like we saw, let's say back here, we see these massive pushes in volatility, and then you see these contractions right here. In these contractions, you're looking for these triangles, these wedges, these price action patterns. And right now, that's exactly what we're looking for. All right, let's first talk about, let's do Link. Also, if you have any questions or alts that you would like me to mention, don't hesitate to drop them in the comments, and I'll be sure to check it out. All right, so let's close this off. Let's start off with Link. Link had a massive move here a couple days ago on August 8th, or maybe almost a handful of days ago. And it's It's basically at an all-time high. So we're just looking for continuation patterns. We do see that this is the previous high right there at around 1470. So that will be the possible first level of support. But we also do see the candle closures in a main level of support sitting around 1380 as well. So right around there. So these are your two zones. I don't think we're going to get to 1390 or 1380, somewhere around there. I don't think we're going to get there. I think the zone that we will be looking at for potential opportunities is like 14.5, just because that gives you a little bit more wiggle room. And I think that the buyers are going to be pretty aggressive to eat up any pullbacks, just because look how much it's been running. And this is a nice tight consolidation after this. Great move right there. So yeah, my personal opinion, I do think that this is a great opportunity for continuation setups. And like we saw right here, this is the high, right? We got one pullback to test the high, and then we absolutely mooned, right? And then this is another setup where it's a triangle, you're getting a pullback, and it looks like it's trying to push up again. So let's go into a smaller time frame to see what we're able to identify. We do see a support a little bit higher than the key level that we want for potential entry right here. But on a 15-minute candle closure, we do see a wick. On a 30-minute, did not close so favorably. On a 1 hour, it's not so bad. I think we might get some consolidation here. And if we're really trying to get nitty-gritty, we could look for that zone right there to appear, because that is an impulsive push. This is a correction. In corrections, we want to see ideally a descending zone with a series of lower highs and a trend line to connect the lower highs. You'd be looking for either a descending zone for a wedge or a horizontal zone for a descending triangle formation. You could be looking for ascending zones, but this, in my opinion, is a little bit more of a respected pattern. And you're not really entering at the high, you're entering at the completion of the contraction, at the pullback of the first impulsive push in the continuation of the momentum to the upside. That is the structure ideally that you want to be entering in for our method, so that's what we're going to be looking for. So we see a minor level at around 1520, 1516, and then we would like to ideally see the price come down a little bit further. So that could be a wedge that could form somewhere around there on a 5-minute chart. On a 15, that could work as well. So let's get that green. So on a 15, that's how it would look. And then ideally, obviously, you're looking for a break and retest of a previous high once it does complete that nice squeezing structure. So that's chain link. I think definitely still has a little bit of ways to go. Let's look at VeChain now, because we did talk about a potential opportunity around the 2.0218. That's why we wait for market structure, and that's why we wait for holding. So let's get an instantly rejected down, right? There's no holding, there's no wick on a 15-minute chart. Not a single green candle, right? Not a single one. Let's see on the 5-minute. Right, downtrend. Just straight downtrend. You see no break and retest, no impulsive push to the upside. This is why waiting for confirmation is very important. So let's get back into the price action. Also on the 1 hour, it does not look very favorable. So let's bring this back out here. Because we see candle closure, type C, which is an ideal, type A, which is great, type C, which is not great. Let's see if we go like that. That may be the structure that we're looking for right there. Because all we need is 3 very well-respected zones to match up. And we're looking for that. Perfect. I think I will leave this right here. And then we do see a nice little squeeze occurring like so. There we go. Perfect. Okay, so that's what we're going to be looking for until we see a break in the structure. Not only the descending but horizontal, we're not really going to be looking to enter. If we see a further pullback, we want to see the price hold this 0.18 zone. And then we're looking to hold this area and form something like this. And you're looking for a break and retest of a major high right there and to a new level of support. So that's going to be your potential outcomes for VeChain, my personal opinion. Like again, we're only looking for longs. We're not looking for any shorts just because of the fact that I think that BTC is going to continue to go higher, and it doesn't make sense to look for small entries on shorts when you could be looking to carry the trend when the trend is very strong to the upside. So we'll see where this goes, but I think it's not ready just yet. Zcash, not super interested in it. Theta, not super interested in it. I think what we're gonna do now is look at some relative strength and weakness. So let's go right here and look at the relative strength and weakness. Comp is absolutely smashing out of the park right now, it looks like. Moving 39% since August 10th compared to BTC. Wow. Okay, so let's look at comp. Link we already looked at. So SXP and Atom. Okay, so let's look at comp. That's going to be the main one I think that we should be looking at. Cardano, not really doing much. Cover Network, not doing much. XRP faked us out, and then continuing to the downside. Okay, so I think we can get rid of this. And let's start off with the weekly, see what we're working with. Wow, that was a huge move to the upside. And it's good to see relative volume increase. We see, yes, there's sell volume and buy volume. Yes, I agree, but the fact that we're increasing the amount of people transacting this pair is a positive thing because there's more liquidity and that creates tighter spreads, and that's great because larger, not institutions, but people with more money are able to trade this because it's more liquid. If you're trading $1,000, you can trade basically anything on Binance. If you're trading $100,000, you are a lot more limited. So more liquidity is a positive thing. Relative volume increasing is a positive thing. And that's what we're seeing right now. Look at this massive bullish green candle. So actually, let's look at the high here because that's going to be an important place to identify. So that's the candle closure high on the daily, and we got the wick high right there. And we do see that the price hit that zone and came back pretty aggressively. But we do see the higher lows still holding, so it does look good. Obviously, there's a tremendous amount of buy pressure compared to sell pressure, so it does look like the bulls are definitely still interested in this opportunity. So we do see on the way up, key level of resistance turned into new level of support, came right back down, now broke below it. So this is going to be the main level of support that I'm looking at this point. We see candle closure, and then we see wick retest, or candle closure retest, and wick retest. So we can see that 215. Wow, it's expensive for one. Yeah, 120. Yeah, just expensive. Wow. Just in terms of relation of like one to how many units of dollars it takes to buy one coin, but obviously it's all arbitrary. You can create one of one or a billion of one, right? So that's going to be the ideal situation. Don't know if we'll get it. Let's go into a smaller time frame and see what we're able to identify. It would be nice to see some level of a squeeze, sort of like that, turn a previous level of descending resistance into a new level of support. It does kind of look like we have that right now. It's not perfect, like really at all, but I think we'll be able to make it work here. Got a resistance. I don't love this candle closure that's higher. That's good. That candle closure could be a little bit better. That retest is really solid, but I'm a little bit picky when it comes to that sort of stuff. That's going to be the previous resistance, which is also going to be right here. This previous high that we needed to break right around there. Not really precisely on it right now. Could go there. Let's work with that and see what we're able to identify. Yeah, that was a huge sell-off here. And let's just see how some of these other sell-offs reacted, right? Big sell-off, you got a small series of higher low, not a double bottom, and then you get a massive bullish candle. You just got a slow climb up. You just got a pretty aggressive, quick climb up. So let's get our bars pattern. So we could theoretically just see something like this. If you're just looking at past trends, right? Ideally, you want to see some level of key area break. Like we saw, that zone right here was a key support, turned into a resistance because this candle right here pushed up, it came right back down, leaving a wick. So if we get, that could be an opportunity right there. Just for potential opportunities in the long plays. And then we can clearly see a very strong either level of support, or you could draw an ascending zone, right, which is going to be playing as a level of support as well. So let's go like this. Like so. So that's a pretty good level of demand that we're currently at right now. I do expect BTC or comp to probably continue on and trek forward here. And then you'd be looking for a possible squeeze, a descending area like so. And then now you have your large time frame squeeze, which could absolutely explode. So you got this zone right here and this zone right here. We're currently at the low. We could see something like that. Obviously, you're not gonna, yeah, it could be something like that. I don't exactly know, but if you follow this channel, you know exactly how the type of structures that I trade, because I trade the exact same type of stuff every single time. And like you should, right? Like you back test it, you test it out, you make sure that it's repeatable, dependable, and you can basically kind of create a similar structure every single time, and you just stick with that. So that's going to be the opportunity that I see on comp. Ideally, that would be kind of soonish. We'll stick on a smaller time frame and keep that close. Cardano not doing much. SXP, it's like really volatile. Not as much liquidity. I don't absolutely love it. XRP is not really doing too much, so I'll keep this up top here. And then we're going to quickly go over another two pairs here, Ethereum and then also Binance Coin. So Ethereum had a little bit of a spill, but it's definitely still holding. I'll just actually keep that, but I will extend this out a little bit further, because this zone is going to be a key level of confluence that I think if we see a break, we'll see a pretty aggressive move to the upside. So this is that main level of supply that I'd like to see Ethereum break, which is around, let's say, $400. Let's say conservatively $400. Once we're able to break that zone, that's a key level of resistance for the descending zone as well as the ascending zone. And I think that for any shorts out there on Ethereum, they will get blown out around above $400. They might try to put a stop loss above 421, although if I was short, I definitely would not be doing that, although I would not be short on Ethereum in the first place. But that's that key zone that I think will hold the price. And then let's just look at horizontal zones aren't doing a whole lot other than just supporting the price, but not really squeezing. So in an ideal world, let's just see if we can find something that's a little bit more of a squeeze. So that's going to be the new potential level of support here. So it's not as aggressive of a squeeze, but we do see that, let's get our brush. Even if we come back down here, we are going to be squeezing with this descending zone and this ascending zone. And like I said, again, we're only looking for longs. We're not looking for shorts because this is not a market for shorting in my opinion. All right, so that is Ethereum. I do see a comment from Dan saying, can you look at band? We can sure look at band. Actually, let's look at it right now. So let's just set this up a little bit so we can see. And then let's just get XXP out. All right, so let's look at the daily chart, see what we're working with. Jesus, that's the log. Okay, that's the log chart. Yeah, I was like, there's no way. Okay, so we're basically in uncharted territory here. First level, not really creating a horizontal zone. It's an ascending zone for sure. Unconfirmed trend line because it is only 2 validations where I need 3 validations in order to classify it as a respected trend line. And then we got the high that was tested twice right here. We see the candle instantly hit that and rejected down. And then we see yet again the price try to pass it again and came down. So it's 2 rejections of the 17 and let's say 50-cent range. So that's going to be the current level of resistance. So we could see something like an ascending triangle like that, where you'd want to see at least minimum 2 more touches here and 1 more touch minimum on the bottom, because you have 1 touch, you have 2 touch, you need at least 1 more here, and ideally you'd have 1 more and then a second one right before you continue to move to the upside. Retest resistance, turn to new level of support, and that would be your 3rd validation. So that would be the first structure that you'd be looking for. And other than that, I don't really see anything that would be a possibility. You got a consolidation, and really only thing I could see is this ascending zone right now. If we do form this lower high, and let's just say, for example, we hold this resistance right here, and then we go like this, because we do see that this is a level of resistance right here, right there to there. So if that holds and we see something like this, we could drop down into a smaller time frame. So let's go like this. So that is what I'd be looking for, is a descending triangle breakout to the upside, like so. So this ascending support is unconfirmed and this descending zone is unconfirmed. We do need 1 more validation each, so 2 validations in total, 1 on the resistance, 1 on the support, in order to classify this as a symmetrical triangle. And then what we'd be looking for is to see a break and retest of a key high. Right now, the key high would be definitely, let's just make it easier for everyone, would be around 1522 would be the key level of resistance that we need to pass and break. So let's say we go like this. That would be the consolidation you'd be looking to enter in. You could look at stop loss previous low or stop entry above that zone, limit entry when you're retesting, whatever your system is. That would be the type of situation. Ideally, you do want to see a little bit more contraction before you see a breakout. But it's not a bad looking setup, to be completely honest. So I will actually keep that and see what it does. And I'll just keep this open right there. All right, so yeah, no problem, Dan. I will continue on and trek forward on Binance coin. So it's looking great for a potential break. We didn't break $23, so there was no entry signal, not a problem. What we're going to do is just continue this like so. Move that a little bit, and then add the projection. And we can close this. And we can do something like this. And let's get our projection and project inwards. All right, so we're definitely a little bit further away from a breakout than ideally, but that's the current structure that I currently see right now. Let's close that there. Perfect. So what we're looking for, like always, is a break and retest of a key zone of confluence somewhere around there. And I think you will probably get some retest of these highs. So that could be an opportunity. But in terms of a large time frame, Binance Coin is in a breakout. We just broke out of this key level of resistance and we're heading to the major high right here. So I think this is going to be a place to look for continuation patterns. Kind of like we see here, you know, key level where we broke out of, we bottomed, aggressive push to the upside, continuation pattern, and then aggressive push to the upside, right? Very, very similar type of situation. You see key level of resistance, break, retest, retest. We're looking for continuation. We're looking for continuation for the next key level of high right there. So I think it'll come into fruition. Just takes a little bit of time for it to actually evolve and get to the structure that we're looking for. But you know, it's slowly on its way for sure. And Ethereum is definitely a little bit further away. All right, so I think that's going to be the end of the both global macro update and crypto market update. Thank you very much for everyone swinging by. Really appreciate it. And if you do have any questions, if you're watching this recorded version, don't hesitate to drop them in the comment section below, and we'll be sure to help you out as best as possible. So thank you very much for your time, and until next time, have a good one. Hopefully you got some value, education, entertainment, something out of this. So till next time, have a good one and happy trading.